Investors and traders, welcome to the channel. Today is 22nd of February 2024. I hope everyone is having a great day. In this video segment, we are going to take a look at the technology stocks for the United States market. We will start by taking a look at the ETFs such as the XLK and also the QQQ, and then we'll cover the individual stocks such as Tesla, NVDA, Apple, Microsoft, Roblox, Shopify, Amazon, and a few others. As always, this video is for educational purposes only and it is not a financial advice. We are taking a look at the XLK, which is the Spider Technology ETFs, and this is the weekly chart. I'm going to use the weekly chart and for some of the stocks to actually go down to the daily chart as well. And one thing I would like to point out is the week is not over yet. We completed Thursday. We do have Friday's trading that needs to take place to close the week. However, in the previous video that we had done, we were watching certain key pattern formations which were taking place on the weekly chart. So the weekly chart is very relevant. So in this XLK, what we can take a look at is that it is actually finding support as of today in terms of its price action. The previous week, we had seen a week which had a negative close, and this week, as of today, for example, the rally has been pretty good in the tech stocks. From a pattern perspective, we had been actually expecting this because we have a slightly higher target of around $216 per share level for the XLK. Note we in that region of 216 to 220, we have quite a few of these patterns completing, and those are our targets. And it's possible that this market is actually able to achieve those. We are actually getting closer towards the targets. Let's take a look at the QQQ. This is the weekly chart of the Invesco Trust series, and here a slightly different pattern to the XLK. We have the $450 per share level, which is our target. One of the other things that I would like to make a note of is this ABCD pattern formation in blue. That's a little bit closer around 445. So 445 to 450 is the target that we are looking at the weekly charts. This week, it's not over yet, but today we had a fantastic rally. Let's just go back and see this. So the technology stocks actually have been under pressure because of certain data related to inflation, which came out earlier in the week. And then, of course, yesterday we had the Federal Reserve minutes come out, and that also started a rally in the stocks. But here, this is what we were actually watching. If you look at this, the previous correction that took place in this move higher was about this much in magnitude. And what we see now is if we just copy this and project it from the high that was reached on the 12th of February, the low comes in around 421, and the actual low yesterday was 421.63. So this is a concept of market symmetry. So this is something it's a really powerful concept of market symmetry. It shows the harmony in the market that markets like to repeat over and over again, especially when they are moving in a rhythm. For example, the rhythm here has been since last October 26th, 2023. The market has been in an extended bull run, and in this swing, the corrections that have taken place are of this much value, absolute value in terms of the numbers. And what we see is that the market actually respect that, and whenever we see a pullback reaching this much in terms of its actual values, we see a market put in a good bottom. So this is what we're expecting. Had it actually exceeded the pullback, then we were to look at in a different way, because it means that the phase of the market is actually changing and we could have a deeper pullback in play. But here what we have seen a fantastic back to the top of this range price action seen today. It's possible that tomorrow, because of this really powerful move, we see an inside bar. And if this move is really strong, then on the weekly chart, we have slightly higher targets as well. The market could actually move higher. But what we are seeing is basically a test of the top of this range for now. One of the other things is that when this pullback happened last time, it was 1, 2, 3, 4 days, and this time, in terms of time, 1, 2, 3, 4, 5, and the actual sixth day was when the actual low came in. Okay, so with that, let's actually take a look at Tesla stock. Here we go. As you guys know, the long-time subscribers, we have been following the Tesla stock for quite a long time. We have been really fortunate to catch that low of around 105 when it took place early last year in 2023 because of the pattern formations that we were watching. And here, one of the things that I would like to point out is here $175, 175 to 155 was the kind of the region that we were watching for a good low perhaps to come in, and 175 so far has held. And there's also this inverse head and shoulders pattern which exists here. And one of the things that I really like to take into consideration when I'm looking at the head and shoulder patterns, whether it's an inverse head and shoulders or a head and shoulders pattern, is the time symmetry. So they need to be pretty symmetrical. So for that, here we go. If we take this low and we take the left shoulder and then we copy this and we bring it over, and the right shoulder, there is pretty good symmetry in between the left shoulder and high and the right shoulder as well with respect to the head. So that's good. And what we have seen is a big rally take place on the 15th of February, but the market just went sideways. And today we have seen a good price action as well, and the price has closed above the 20-day moving average. So that's always good because it's something shorter term traders like to see. But one of the key things that I would like to point out is that from a timing perspective, we were looking at 23rd of February, which is going to take place tomorrow. So tomorrow is 23rd of February as a cycle low to come in for Tesla stock, a potential low. So time is always elusive, but what we were watching for was, let me actually bring it like this, that if we look at in this cycle low, which took place in January of 2023, we have had a major low come in on April 28th of 2023. And if we just take this and project it, it's just like our ABCD one-to-one projection that we do on the price axis, but this is on actually the time axis. Then we find another key low come in around 21st of August, where we saw a good rally take place. And if we use the similar concept and we actually project it from this key low, then we get a date of 23rd of February. So it'll be really interesting to see how the price is going to price action will take place tomorrow. One of the things about the time is and these time cycles, we need to take a look at them with plus minus 2 to 3 trading days. So they could come a little bit early and they could come a little bit later on as well. And then there's always a possibility that there is a bigger cycle which is in a different phase and it is actually causing the price to do something different to that what we were expecting. Now here what is possible is that we have seen a good low, for example, at $175 per share level, but the market could actually put in another internal low. We'll have to wait and see. Or we could see that this low being held from 13th of February and the market actually put in a big rally. We'll have to wait and see what tomorrow's price action will be like, but it's worth noting that we have a potential cycle that we were expecting a key timing date coming tomorrow. Now let's take a look at Apple stock. So this stock has been in a bit of pressure. Just to remind you, Here we go. This is the weekly chart, and here ever since we had this target of $200 per share level met, it was pretty strong resistance level because we have a number of key ratios and pattern formations coming together here. I'm not going to go into the details of those. You can watch previous videos for those, please. And here there is an expectation that perhaps the market could actually pull back to about $175 per share level. So that's certainly possible. And after that, we'll begin to evaluate if there is a possibility the market could in fact pull back a little bit further to the 78.6% retracement, which comes around 170 to 175 to $170 per share level is probably where the market might actually go. And one of the other things about the Apple stock is this level 120 is really strong because of the number of Fibonacci aspects that come around here. So the stock, maybe it might go through a pullback, maybe it might come back into the middle of this trading range. That also remains possible, touch the 200-day moving average, but this low, as long as not taken to the downside, Apple stock is pretty strong. With that, let's take a look at Microsoft. Here we go. So the Microsoft stock is it's pretty strong now in the sense that it put in a good low, and now there's a chance it might actually go and reach $433 per share level on the weekly basis. On the daily, you can see that the stock had a bit of a pullback around here, tested the bottom of this range, and today it's closed above the 20-day moving average, which is good from a shorter term momentum perspective. Let's take a look at NVDA. So the NVIDIA earnings came out yesterday, and it also moved the overall broader indices as well. And again, fantastic earnings, and it's reflected in the price of the stock. Taking a look at this on the weekly, what we can see is we have this ABCD here. I've not labeled it, but this is what we are looking at, this swing low to this swing high. We projected from here, which was a very shallow retracement for this stock, and it's just right where the price closed today. And now because this momentum is really strong for this stock, and it's only $200 away from the $1,000 psychological level, it's possible it might actually go and reach that. However, if we begin to see on a daily chart, for example, some pullback come in on a bear body candle formation on a daily chart, then there's a possibility that this ABCD, we might need to pay a little bit more attention to it. But there's also a chance that this stock is only $200 away, and the way the stock moves, $1,000 per share might be something it might be able to do as well. Okay, with that, let's take a look at Shopify. So the weekly chart of Shopify, we were expecting actually the market could reach anywhere between 95 to $100 per share level, and so far the high has been about 91.50. So the way the stock is the week is not closed yet, but if it closes a negative for the week, taking out the low of 29th of January 2024 week, then perhaps there is a little bit more in its pullback. And right now it's very close to its 38.2% retracement as well. So around 73.50 could be a level of some sort of a support. We'll have to wait and see. Moving down to the daily chart, these big gaps, I don't like this. And this is, I believe, when the earnings came out, and the stock closed lower, and then the stock tried to fill in the gap. Let's see if it filled about 50% of it or not. I don't think so, not 50%. So these gaps I don't like. So we have to really carefully watch. It is possible that our target of $100 per share level roughly, we might not be able to achieve if it begins to close weak on the weekly charts. With that, let's take a look at Amazon. So Amazon stock had a good rally today. I'm gonna take a look at this on the weekly charts because over there it's a little bit clear. We had this pattern formation around here. It could take the stock to about 183, and of course we have this top of 188, which is the all-time highs. So maybe the stock actually want to go and make another attempt nearby that region. Whether it'll have the strength to close above that, we'll have to wait and see. And it's in the news that Mr. Bezos, he has been selling quite a lot of his stock as well. So we'll have to wait and see. One of the things about the stock is that it really likes to do double tops and double bottoms. So here it was a double top, and then we went down. Here we had a double bottom. You can see there was a bottom here, formed another bottom, did not take this bottom out, and then off we went for a rally. So this is something to take into consideration. Maybe it's gonna go and tackle pretty much near the highs, or maybe even try to attempt to make a new all-time high. That's also possible for the stock. And let's take a look at Roblox. So the Roblox, we have this pattern, and there's a chance that if it is able to close above 53.81, we are looking at about $60 per share level. The stock is from a daily perspective. Here we go. It's been in a trading range above the 38.2% retracement, which is good from a momentum perspective as well. And also looking at the 20-day moving average is above 200-day moving average. So the stock has pulled back a little bit. What it has done is done another one-to-one price projection like this, pretty much there. But the chances remain that it could actually try to make an attempt towards $53 per share level, and then perhaps even $60 per share level as well if the momentum remains strong. Okay, with that, let's take a look at Zscaler. Okay, so the Zscaler, something I don't like about the stock is there's just price action. Um, Here it's just really massive gap you can see, and then another gap around here as well. So that most likely looks like some short covering price action. If we look at this on the weekly chart, we were watching for the price to move down to about 38.2% retracement or $195 per share level. And we also had this little line around here because essentially what we were watching for was that if it could pull back around in this region, uh, there is a possibility the stock could do a cup and handle formation, because look at this, it's a really nice accumulation pattern around here. And if because of the strong, not now the week is not over yet, but if it just price begins to trade in a trending range and perhaps move sideways to a little bit lower, like this in this kind of a channel, and once it is able to break out of this channel, then we'll have this really nice cup and handle formation. But I really did not like how quickly in just one trading day the price just came around here. That's not what I was really expecting from a price action perspective, which we just had seen on the daily chart. So we'll just keep on watching this, because just really trading at the 20-week moving average is above the 200-week moving average, which is good from a momentum perspective. But looks like the stock might actually go sideways for quite a while, and we'll be watching this pattern formation. Let's take a look at Meta. Wow, so this is such a fantastic stock of Meta, and the amazing thing is the recovery this stock has done. So it actually, retraced all the way um, from its IPO lows to the all-time highs, back to the 78.6% retracement. And since last October 20, not last, but October 2022, a massive rally has taken place in the stock, new all-time highs, just amazing. And it's just really also at around our key ABCD levels, just trading there, just going sideways. And from a momentum perspective, it really remains really strong. We'll wait and see how the price is gonna actually trade around this level, but we do have this ABCD pattern, but the price is a little bit above that, so that's what we're watching. Finally, let's take a look at Netflix. Here we go. So the Netflix on the weekly chart, the week is not over yet, but we're looking at this pattern. It's just been trading around 78.6% retracement for quite a few weeks now. So basically a sideways or a trading range pattern, and not very optimistic about this stock in the sense that it has already moved quite a lot. For it to go and tackle these all-time highs, it really needs to break out of this 78.6% retracement. That's going to be one of the key things for the stock. And just really quickly, I believe it's also at the 1.618 expansion. Here we go, a little above that, so that's good. So it's really 78.6% retracement that really needs to tackle to the upside. So thank you very much for watching the video. Good luck and good trading, and speak to you guys soon.